This meeting is being recorded.
All right. Welcome. Because I'm going to post this on YouTube. So I have to record the content. Okay, so you guys are like my YouTube audience. Okay, so back to what I'm saying. We have the dollar index and we have the euro index. Okay, the euro index is the EXY. The EXY gives the direction of the euro, and the dollar index gives the direction of the dollar. It's called the DXY. So what I tell people all the time, that the best thing to do for yourself is to first analyze the dollar index or the euro index before making a decision on, maybe if you are trading like us, we are focused on euro USD and euro JPY. So when we trade euro, it is best for us to analyze their indexes. So this index gives an overview of what this currency pair has been doing. So if we go to the monthly time frame, and then this is something people don't know, you can actually look at a 6 months time frame. There is a 6 months time frame. So the 6 months time frame, you can see from 2007, they started using the index. And you notice, if you notice, over time, we've had a movement of the dollar in one direction, which is the upside. Are we there? Now, if I come to the weekly time frame, and the weekly time frame and the monthly time frame. Now, before I would want to do a simple analysis or a simple top-down analysis, top-down analysis, or what I call the hello? Are we there?
Yes, sir.
Yes. So quiet. Okay, what I call the time frame analysis, time frame to time frame analysis, or time frame. You can call it top-down analysis or time frame to time frame analysis. Now, how does somebody analyze the markets? Okay, last week we learned about support and resistance. Now let's go into the real deal, time frame to time frame analysis. Okay, so the first thing you can do is to use what I call the 3 months. The 3 months is to first of all come to the 3 months, right? 3 months. The first thing you want to do is to come to the 3 months. 3 months. 3 months. Now, support is floor. Resistance is roof. Support is floor, resistance is roof. Are we there?
Yes, sir. Which is, sir?
Yeah, yes.
So back to what I was saying, support is floor, resistance is roof. Sorry, just hold on 1 second. I mistakenly kicked the light on my desktop, and so it went off. So back to what I was saying, support is floor, resistance is roof. Okay. Now, after you have looked at the 3 months time frame, time frame to time frame analysis is just a simple process of breaking down various time frames and analyzing various time frames. So you break down 3 months time frame, you go to 1 month time frame, you go to 1 week time frame, you now go to 1 day time frame, you go to 4 hours time frame before you jump over to 1 hour, and then your entry time frame can be 15 minutes or 30 minutes. And then you look at 3 minutes as, I use 3 minutes as my
Teacher, can you explain
confirmations.
the difference between 3 months, 1 month, 1 week?
Okay, beautiful,
Okay.
beautiful, beautiful. Once my screen comes up, I'll show you something. 3 months time frame is the time frame of a market for 3 months. Okay? 3 months time frame is the time frame of a market for 3 months. So what has happened in a market for the last 3 months? That's basically what 3 months time frame is. What has happened in the market for the last 3 months? So 1 month time frame is what has happened in the market for the last 1 month. Are we there? So it's just basically a combination. Okay, let me ask a question. How many days make a month? How many days make a month?
31 days.
31 days make a month. So a 1 month
Yeah.
time frame is a combination of 31 days. A 4-hour time frame basically is a combination of 6 4-hour candles that make 1 day. Okay? Okay, my screen is my screen is on now, so I should be able to show you what I'm saying right now.
But my screen now is dark. Maybe I don't know if it's for your side, sir.
Okay, you very shortly you'll see my screen.
Okay.
Now, who here already has already started trading? Who's trading right now already? Somebody in this place that is trading. Who's currently trading?
I am
Do we have any
currently
trader?
trading.
You're currently trading.
Yes, sir.
Who is this? What's your name, please?
I'm Adedej by name, sir.
Oh, okay. You're currently trading. Okay. What do you trade? Are you profitable?
Well, not yet.
Okay. Are you trading demo or you're trading live accounts?
Trading life account, sir.
Oh, okay. What pair are you focused on? Do you have a pair of focus, or you are trading?
I
Looking
actually
at several pairs.
I think initially it was 3, but when I started this class, I reduced it to 2. Majorly Euro USD.
Okay, you reduced it to Euro USD. Okay, how has
Yes.
trading Euro USD been?
Well, last week there was some kind of confusion in my analysis. I was still trying to get the hang of it, sir.
Okay, what about the previous week?
I think I didn't trade much for a while.
Okay.
So I just started from I started back when I started this class.
Okay.
Yeah.
Okay.
I myself have been trading demo, and I've been focusing on gold, Euro USD, and Japanese USD.
Okay, Euro JPY, USD
Yeah.
JPY, right?
Yes, sir. So when I trade, I don't trade every day. So I trade like when I trade today, I would like to study before I enter, because I analyze and I pick on a trade I want to go on. And they have not have like on that demo, I have like they gave me 5K does, but I've been able to make like 60 or almost $70 within the period I've traded with it.
But let me tell you the truth of the matter. You will not learn how to trade with demo.
Okay.
You will not be able to learn how to trade with demo.
Okay.
Yes, that's just the truth.
Okay.
If you actually want to trade, I would advise that you learn how to trade using using a live account. So using a live
Okay.
account, that would be my advice, that you should use a
Okay.
live account and learn how to trade. So
Okay.
what you can do for yourself is that you can fund a $10 account, okay? And try to
Okay.
flip that $10 account. I'm sure you can. $10 is not a lot of money for you. That's 7,500 naira. Where do you
Yes.
live? So,
I live.
and if you're
I
not
live.
willing to lose 7,500 naira, let me tell you something. Let me tell you something about trading.
Yeah.
If you do not conquer your fear of depositing money into a broker and your fear of losing money, you will never succeed in trading.
Sure.
You can
Sure.
trade demo for the rest of your life and
Yeah.
be deceiving yourself that you are still trying to get a hang of this thing. That's why you've not gone live. But until you
Already.
look at your fear and conquer your fear, that's the only way you are actually going to say you're actually going to succeed. Do you understand?
Yes, sir. Actually, I have in mind to fund my account probably this week. Like, because I myself, I feel like I'm wasting my time trading on demo. Like when I see all those profits, I'll feel like this is something I should just be doing with my
Please, sir,
life
can you make
account.
Mark a this thing a host? So another reason why I am not a fan of telling people to trade to
Hello,
go
sir.
on demo.
So I'm
Yeah, I'm
thinking
asking.
sorry, sir. Anyone that wants to fund his account will send a link to you to
Yes.
register with our app, and then we'll take it from there.
Of course, you should fund with M4 Markets.
Yeah,
You
just
should
chat
fund
with the
with,
admin after the class, and then
yeah,
so
you
that
should.
we'll be able to cover a lot of things we want to cover. You said
Okay,
I should
please,
make
Okay,
Mark,
I was trying to
Mark,
yeah
yeah.
I was trying to create I created I was trying to create the X next yesterday night.
Don't create an
And
XNext account. XNext is not a good broker. We have given you a
okay,
recommended broker to go ahead and create an account with. XNext is not
okay,
a good broker for small accounts.
okay,
So if you're going to fund less than $500, I don't advise you to fund XNext
okay,
because the spreads will send you back to the village.
one
Do you
okay,
time,
understand?
one time.
So,
okay. Thank you
so
for
and
this information.
I'm not trying to play down on XNext. XNext has the best IB program in the industry right now. All right.
Yeah,
But
yes,
the people, I have traded with them, so I know that if you fund less than $500, because to fund less than $500 is a standard account. Do you understand?
yes, sir.
So if you fund less than $500, don't use XNext. All right.
Okay, okay,
Yeah. So
sir.
fund with M4 Markets. Fund with M4 Markets. What I would advise is what we recommend use. Do you understand?
Yeah,
Because the biggest issue you can fall into in the industry is scammers, and because there are this industry is not what you think. Everybody wants to take your money. Do you understand?
yeah,
Everybody
yes.
wants to take your money. When I first started trying to learn how to trade, I know how many people, I think people of this time have it much more easier than when I first started. Because back then it was so difficult for me. It was very difficult because there were so many scammers. All right. So what was I talking about? Okay, I talked about
So
EXY,
this song,
which is the
chat me
Euro
up
US.
after the
index,
class.
which is the Euro
Okay,
index, and then
I
a
will.
dollar index, right? Now I was trying to talk
Yeah,
about uh,
the
uh,
resistance and the roof.
I was trying to talk about time frame to time frame analysis. And I said,
Yeah,
the first thing you want to do is go to the 3 months and mark the floor, which is the support, and then
the
mark your
support.
roof, which is the resistance. Okay.
Yes.
And then you want to have an overview of what this market has been doing. So for example, this market has been selling, but remember, this is 3 months time frame. It's a 3 months time
Okay.
frame. So there's a whole lot that has happened. So you move to a 1 month time frame, and you still want to mark from a 1 month time frame. For me, I would rather have why is it not coming up? Okay, yeah. I'd rather have, what do you call it now? I'd rather mark my trend line. So what's a trend line? A trend line is basically the touch between at least 2 points. So once the market touches 1, 2, this is a trend line. Now it has to touch just the trough, which is just the tip. This is not a trend line because it entered it. It didn't touch the trough. This is not a trend line. A trend line must touch the trough, just the trough. And it has to be at least 2 points. This is not a trend line. This is not a trend line.
Okay.
This is not a trend line because it didn't touch the trough. What is a trend line? This is a trend line because it's touching the troughs. So the next thing I want to do on the monthly time frame, I would like to draw a trend line to know what has this market been doing. Okay, so I draw a trend line from this level to this level. Now, let me tell you something. If you analyze a market properly, using top-down analysis, using time frame to time frame analysis, you cannot be wrong because higher time frames tell you exactly what a market has been doing. Okay, it gives you an understanding of what this market has been doing. So from here, we see that the market touched here, and overall direction we are seeing is a bearish sentiment. Okay, so back to my monthly time frame, I want to draw my key levels. So I have, of course, I have drawn my first resistance. The next thing I want to draw is my second resistance. So how am I drawing these key levels? So let me blow this out. So look at this place. If I increase this, you can notice that price came in, touched it, came in, touched it. So this is clearly a resistance. Comes in here, touches this place. This is another resistance and comes down. So goes up, come here. I can see clearly that this is a support because it's supported at this level and went up. So this is another floor. Okay, I have another floor here because it shoots up to this level and comes down. This is another roof. This is another roof. It comes down, goes back to that same region. I can touch it a bit and shoots down, yet another roof. And then it comes up to this level and it's around here. This is our point of interest. Now, if I come to the weekly time frame, now I have basically drawn my key levels. This is what we call drawing key levels. So these are key levels. So the next thing I want to do is to come to the weekly time frame and look out for what we call market structure. So today I'm going to teach you 4 types of market structures. I'll teach you double top, double bottom, head and shoulder, inverse head and shoulder. Now, what's a double top? A double top is when price shoots up to a level, comes back down, and then goes up. This is what we call a double top. This is what we call a double top. It's a double top. This is what we call a double top. Price comes to a level, comes down, comes to that level, comes down. Now, this is what we call the neckline. This is the neckline. So this is neckline 1. This is neckline 2. So this is the first neckline. This is the second neckline. Now, this is what we call a double bottom. A double bottom is just an inverse double top. So price comes to a level, goes up, comes down, goes up. A double bottom. Are we following?
Yeah.
Yes.
This is what we call a double bottom. Okay? This is
Yes,
a
sir.
neckline. This is another neckline. Are we there?
Yes, sir.
Now,
Yeah.
an inverse, a head and shoulder. A head and shoulder is basically when price gets to a level, comes down, gets to another level, comes down, gets to that level. Maybe it could be a bit like this and comes down, but it doesn't get to the head. So this is called shoulder, shoulder, head. You know that song? Who knows that song? Head, shoulder, knees, and toes. Head, shoulder, knees, and toes. So this is shoulder. I'm just thinking about the headaches I went through in learning these things that I'm teaching you for free. This is head. So this is shoulder, head, shoulder, head, shoulder. The person that first taught me what head, shoulder, head and shoulder was, he taught me nonsense. I remember that time. Trading is all about information. If you don't have the right information, you will never succeed in trading. So this is shoulder, this is head, this is shoulder. So you are actually wasting your time to go into trading without mentorship. You are deceiving yourself. To go into trading without mentorship, you are deceiving yourself. To go into trading without mentorship, because even people that have mentorship don't even do well. Talk more of you. You say you want to go on YouTube to learn trading. Okay. You spend 10 years trying to learn trading on that YouTube. So my greatest advice to anybody is to get a mentor. Get somebody that you can ask questions. Get somebody that is, the thing about choosing a mentor, I have several mentors in this industry. But, okay, let me digress. In life, you need 3 sets of people. You need a mentor, you need a coach, you need a referee. You need a mentor, you need a coach, you need a referee. I have several mentors, but recently I just got a coach and I'm working on getting a referee. In the industry, you need a mentor. A mentor can be a coach. What's the difference between a mentor and a coach? A mentor is somebody that has gotten to where you are going to. A mentor is somebody that has gotten to where you are going to. For example, let's say you want to buy a house, you want to build, you want to buy your dream car. Your mentor must have already achieved what you are looking for. Let's say you've never cashed out in the Forex market before. Your mentor should have already cashed out before in the Forex market. So that's a mentor. A mentor is somebody that has gotten to the destination. A coach, and he's pointing you to that destination. A coach, in the other hand, is someone that has gotten to the destination, but has now come back to meet you, to take you to that destination. Am I preaching?
Yeah, you're making sense, sir.
A referee is someone that may not have gotten to the destination, but he knows the destination and he knows the rules to take you to the destination. So you can actually have somebody who is both your referee, who is both your coach, and is your mentor. You can have it in one person. I can tell you something. If you don't get a mentor in Forex, you will fail. I'm not playing with you. I'm not joking. If you think Forex is for children, it's for CCs. If you don't get a mentor in Forex, you will fail. You will fail. Or you may not fail, oh, it will take you a long time. Just like it took me a long time. It will take you a very, 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 very long time to get to where you are supposed to get to. It's just a simple truth. And I have said it before, these Sunday classes will not be enough for you. The reason I have decided to organize these Sunday classes is because this year I will make $1 million from this industry. And when I'm done, I won't have to train anybody again because I've achieved my ultimate goal. You know, so I am doing this as a give back because I'm actually tired of training people. So I said, okay, let me do a give back. So my greatest advice is get mentorship. Go on our trading university, pay for a course, watch our materials, and get mentorship. This is my advice. Unless go and do another business. Save your 5,000, your 20,000 naira you have in your pocket. Don't put it into Forex. You blow it. Okay, back to what I'm saying. All right. So there's head and shoulders. There's inverse head and shoulders. Okay. There's head and shoulders. Head and shoulders. So this is shoulder, this is shoulder. This is inverse head and shoulder. So this is shoulder, this is shoulder, this is head. So this is what we call inverse head and shoulders. Okay. So I'm going to do the same thing here. I'm going to look out for these structures on the weekly time frame. So if you see this place, for example, this was a double bottom. This was the neckline. This was a neckline, but it broke the neckline and came down to this place, gathered some momentum and is going up. Gathered some momentum and is going up. So what do we have here? We also have another double top. We have a double top here. So price came here, went up, it's coming down. So what do we have? This is the neckline. Around here, this is the neckline. This is the neckline. Okay. So this is on a weekly basis. Now, I have a bias for Euro USD that I saw today. Like, I saw it today and I know the direction of Euro USD. Euro USD is going up. It's not coming down as I thought. Now, and I'll tell you why Euro USD is going up. I told you that you have to look at the XY or the XY. Oh my God. I told you that you have to look at the XY. The XY. Okay. Are you able to see my screen?
Yes.
Are we there?
Your screen is blank.
Yes, sir, but stop seeing your screen, sir.
Okay, just 1 second. Let me sort that out. Okay, all right, beautiful.
Okay, it's back.
All right, so you have a double bottom, you have the neckline. All right. So I said you have to look at the XY, the XY, the XY. Okay. So let me show you something on the XY. So on the XY, there is a bear pressure. Okay. There is a bear pressure. I'm looking at a bear pressure on the XY. Okay. That's what I am looking at, that there are some bear pressures, you know, but we have to see, because this whole play, this is what, since the year started, the market has been ranging. Okay, so the year started around this January. So it came, price came up, went up, came down. Now, the reason I am supporting the bear side of the XY is because of these head and shoulders. So we have a head, we have a shoulder. Okay. We have another shoulder here. So we have head, we have shoulders. So that's why I am looking at the XY to go to the downside. I'm favoring the downside for the XY. And if I am saying the XY is going to the downside, this simply means that if dollar is going down, all Euro USD pairs, all pairs that have other pairs like Euro USD, I'm expecting Euro USD to go up. I'm expecting gold to go up. I'm expecting BTC to go up. Are we following?
Yeah,
all right?
sir.
Now, on the other hand, I am looking at EXY. And I'm looking at EXY and I'm expecting EXY to go up. I'm expecting EXY to go up. All right. So this is the confluences I am using to say, okay, Euro USD is going up. But for right now, on the short-term basis, there's Euro USD is on a downward trend. Okay, so let me go to the 1 hour. I have marked my important levels. So in this market, for example, now, my place of interest is between this place and this place. Now, what I will do is that I will mark whole numbers. 1.1, okay, no. 1.12, no, 1.11.
Go, kids, go.
Please, there's somebody that is talking. Can you help us reduce your sound? So for me, my place of interest in this market is between my place of interest in this market is between 1.055 and 1.11. That's my place of interest in this market.
1.055.
Okay. Now, the next thing I want to do is I want to look at various trends. So if I draw my trend line like this, I see that this touch broke it. So this trend was invalidated. I can cancel it. Let me draw another trend line. I want to draw another trend line from here. Now, touched it, but he entered into it. Now, the thing about this place, this kind of trend, this kind of situation, this is a very tricky situation, because what happened was that market entered into the trend, broke out, touched the trend, broke out. It's seeming like market wants to go down. Seems like market wants to go down, right? Wants to go further down. Now, but it is also possible that market goes up. Okay, but for right now, our bias is down. For right now, our bias is down, right? Because we know we are looking at other factors are telling us that Euro USD will go up, because chances are Euro USD will first come here and shoot up, because this is the neckline. Or maybe not around that, it may not get entirely to that place, but somewhere around here, because there is a other block here. There's an order block here, and then shoot up. I'll explain what order blocks are. Now, this is what I am looking at right now. Now, my place of interest is between 1.10 to 1.500. Okay. Now, another thing I would like to do is to also move to another time frame, maybe 4 hours, and draw another set of supports and resistance. So I will use my yellow this time around. So I have my first support. I have another support here. There's a I gave a trade signal on Friday to sell for me, and I made money from that sell signal. I made money from that sell signal.
So if I may ask,
Yeah.
so if I may ask, why you don't post signals on WhatsApp or your group on WhatsApp?
On WhatsApp, I do
Yes.
post signals on WhatsApp. It depends on the group you are in.
Which group are you?
I mean, but I don't know, but it's
What's the
like
name of the
almost
group?
3. I mean CGI free money class. I mean everything CGI.
Okay, so you know what? Send me a message, and then we'll deal with that. There's always analysis when there's trade every day. So probably
okay, which of the group should I
Let me
send
show
the
you.
message
Let
on?
me that group you said everything CGI. Look at it. I posted
Okay.
trade. I posted this trade. I posted this trade there. Look at this. Can you see?
Everything CGI, yes.
Yeah.
Can you see the sell?
Yes.
I posted it. What time was that? Friday. What time? Friday by 12:52. That's when I entered that trade. It started selling. I think I even posted when I said on the move, I'm out. This person posted profits. Somebody sent me profits. So you are the one that is not serious because I posted it. Do you understand? I post almost all my trades on the group, if not all my trades on the group. So you can know when I'm losing money, you can know when I am not losing money. The thing is that I don't post numbers, I just post charts because the purpose is for educational purpose. I'm not posting as a signal. Do you understand? I'm posting so that you know how I am making the decision of that. This was the trades. This was where I entered. I was even late, Seth. I entered around here. I think I entered around here. It now came, it gave me profits to this place. I even said, I think I said, I said, wait till 3 p.m. I entered by 3 p.m. again. 3 p.m. I gave a signal that it will come back to that place 3 p.m. And it came back there around 3 p.m. So this was the move. It came, gave me profit, I exited. I put an order. I put an order around here. I think somewhere here. I think I put an order around here. It came, it spiked and came down. I didn't even know, Seth. It's just that the order I put was very small. It wasn't a very serious order. It just came and it shut down. Now, so, and let me tell you one secret. Monday is usually the continuation of Friday. Monday is usually the continuation of Friday. So this market is going to keep selling into Monday. So I expect this market to sell either to this other block or to this place. But it's definitely still selling further. It's still selling further. It's going to sell further. That's my analysis on this market. It's going to sell further for Monday. But overall, let me give you my overall analysis for Euro USD. My correct analysis for Euro USD. Now, what do I have here? Let me increase the length so that you see it. So, neckline of the double bottom, let me increase it to 20. Neckline of the double top is where the buyers are sitting. From this region down, we're only looking at buyers. From this region down. Because I have a bias that this market is going up. Go to 3 months. Let me show you something I saw today. And if by God's grace it plays out like this, we can make a lot of money the next 6 months if we just focus on Euro USD. Okay, before so that I don't mess up my charts there. Let me show you something on 3 months time frame. Now, the most common system of trading is what we call break and retest. What's break and retest? Break and retest is a break of a resistance, okay? A break of a resistance, a break of a resistance, a retest of that resistance, and a shoot up is the most common form of trading. It's called break and resistance. It's what they call order block, it's what they call SMC, all those things. It's still break and resistance. That is the main name. It is where ICT traders came up with this whole thing of ICT, finding the candlestick of reaction. Do you understand? But it is simply break and resistance. Now, on a higher time frame, what has this market done? Let me show you something. This is 1 month. This market broke for 2 months. So remember, this is a monthly time frame. So this year, this is June, this is May, this is April, this is March, this is February, this is January. So this is what this year has done. 1, 2, 3, 4, 5, 6. So what happened? This market, this was a resistance here. If you look at a lower time frame, you'll see that there was a resistance here. This market broke this resistance. It broke this resistance, right? This is break, retest, going on an upward direction. Going on an upward direction. So if you come on a weekly time frame, you can see it very clearly. Resistance, break of that resistance. So this was break of structure, resistance into structure, going up. So on a weekly time frame, this candle here, you can even see that I'm just giving you a typical example of why I still have an upward bias for Euro USD. Because even if you look at it on I'm sure this is a correct way to, candlestick is looking different. Okay, yeah. So you look at it on a daily time frame. We have a structure, a whole structure here. We had a break, resist, break into it. So we had a break. Sorry, we had a break. It's coming back. So it's either it's going to resist at this level, resist at this level, but definitely market is going up. It's going up. Euro USD is not coming down, it's going up. So the idea for the next 6 months I have is that this market is going to go up. So you have to catch what is called the falling knife. So right now it is selling. It is selling. So it's sold for 1 month, right? If you come to this monthly, break, resist. So it's sold for 1 month. So this is the falling knife. So you have to know when that momentum shift is going to happen. But as of tomorrow, for Monday, market will sell. Market is going to sell. But you need to also bear in mind that as it's selling, there is somewhere it is going to react and start going up, because overall, this market will go up. Maybe at this level, maybe at this level. But these whole levels, all these level here, they are buyers. They are serious buyers sitting at this whole level. So let me go back to my main charts. Let me go back to my main charts. So there are buyers sitting down. There are buyers sitting down. There are buyers sitting down around these regions, all these places. There are buyers. There are buyers sitting down all around this area, So, but for the new week, we are looking at sales. We're looking at sales. For Monday, we're looking at sell. We're looking at sales. So a quick thing we can do around for Monday is something like this. No, that will not be correct. Quick thing we can do for Monday is this. We can do this. Okay, yep. We can do this. So price can actually shoot up around this region and continue going downwards and then shoot back. But for me, what I'm going to do is that I'm going to trade this new week, because I am looking at my strong points nowadays. So what I'm going to do is that I'm going to trade tomorrow, which is Monday. I will wait. I won't trade on Tuesday. I won't trade on Wednesday, because I did a statistics of all my trading this year. And I noticed that the days I am most profitable is Thursday and Friday. Because the truth of the matter, Tuesday and Wednesday, the market is unsure of the direction. Tuesday and Wednesday has the biggest moves. Not necessary. They have the fastest moves. The market moves very fast on Tuesday and Wednesday. But the biggest moves are usually on Friday and Thursday. The biggest moves are usually on Friday and Thursday. You see? So for example, look at if I held on to that, to my Euro USD, look at how much pips it did on Friday, just Friday alone. Friday was 8, right? Just Friday alone, if it moved from this place to this place. So for me, I would just wait. Of course, I'm going to chop this whole sell tomorrow. This sell that will move from here to around this region, I'll eat it tomorrow, because it's a clear move. It's definitely coming around these regions. So I'll just wait for a spike to somewhere around here, and then I can take it down. So probably other block. But knowing how Monday moves, usually it doesn't come to that other block. it may from 12 o'clock, you just start selling. By the time you are awake, that move has already happened. So if I'm awake, I may take the move maybe from 2 a.m. You understand? Or if that doesn't happen, I wait for New York. When it now comes down, it will go up around very quickly about the close of volume between London and New York. So that spike between close of volume between London and New York, I can take the sell from around this region. But for Monday, it is going to sell to this place. Now, it may break this trend and come around here. So, but if it comes around here, it's even more clearer that the buyers are taking over, because right now, right there and then, it will be a double top, to be a clear double top. So all you need to
the sellers are taking over, not the buyers.
No. The buyers would have taken over. The buyers would have taken, because this will be a double top. This place and this place will be a double bottom. It will be a double bottom, and it will be a strong double bottom, because it will be the low.
I thought you said if it breaks that place, the sellers are taking over. I thought you said if it breaks that place.
Okay, so my overall bias for Euro USD is sell, is buy. And I gave the reasons why that is buy. I said, number one, EXY is showing buy strength. Number two, DXY is showing sell strength. Okay, so let's look at it again. So I said with DXY, I'm looking at head and shoulders. Shoulder, head, shoulder, over long term. So on a short-term basis, Euro USD will sell. But if it comes around these regions, it is going to go back up. Because look at this, there is a very strong support around those places. A very strong support around those places. Because it will be simply break and retest. So break of this structure, if you come to you see that there are structures around this place. To be break of this structure, retesting back to go back up. That's simply what it's going to be. Do you understand? So my bias remains bullish over a long-term period for Euro USD. That is what I'm seeing over a long-term period. Now, but for now, we have sellers. So that's why around here, I'm saying only buyers, which is from this my line to this line, only buyers. But for Monday, I expect price to come around this place first, possibly break this trend. If it doesn't break this trend, it means it's 3 touches of a trend to go back into this trend. Break it and shoot up. Test it and shoot up. Or break this trend and come to this place and form a double top, a double bottom. That double bottom will mean palm, neckline, palm. Can you see it? To shoot up, to go all the way. So all these places from this line to this place are buyers only. That's my own bias. You may have a different bias, but that's my own bias for the markets, for Euro USD. But for tomorrow, we are looking at movements between this place and this place. So those are the movements we are looking at. Between 7765 and 6787, but taking account to the psychological level of 0.700, because it can bounce off that place very quickly and go back up and start shooting up very quickly. So what I would like to trade tomorrow is just a simple setup, which could be price shooting up to this place, and I sell to around here, and I begin to consider leaving from around these places. Highest it gets here. But from all these places, this 0.700 to this place, from 0.700 to this place, it's just 700 pips. Now, for the banks, they can put a stop loss. Their stop loss is usually 1,000 pips. So all this place, look at other block. There's other block here. There's other block here. There's other block. There are too many other blocks of buyers around this place. And then here's this trend line that there's accumulation, there's price accumulation around this place. So there are so many buyers around these regions. So once price begins to come to 0.70, all these places are places of spikes. It can shoot up. It can shoot up from around this place. So what I'm looking at trading tomorrow is, this is my prediction of how the day would start. Market could just sell immediately. All right, during Asian session, just sell immediately. If it sells immediately during Asian session down to this place or down to this place, I know that, okay, during London session, it will start trying to go back up, but trying to go back up, but I don't want to catch, I don't usually like to catch a retest market. So it's because it could do like this, do like this, do like this, then shoot up. All that period is eating you up. So that's during London session. So I will wait till New York session for the spike, because if it spikes up to the high of the day, it will spike down immediately. So once it spikes down immediately, on Tuesday, it will begin to show signs of accumulation. Then by Friday, it will be around here. Or Thursday, it will be around here, giving us a clear trend line. Also, it will be something like this. So I've given us a clear trend, maybe a clear trend, a proper trend, by Friday. Then you're thinking about serious buyers to go to the upside. So this is now, it's something I took a stock of all my trades this year. I went to our WhatsApp group and I looked at all my trades, all the trades I did from January to this year. And I noticed that Thursday and Fridays were the most profitable days I have. Monday, Thursdays, and Fridays, because Monday is a continuation of Friday. Do you understand? Because people that held the market on Friday in that particular direction are holding the market into Monday. Tuesday, the true direction of the market has started forming. Thursday, Wednesday, that true direction is trying to solidify. Thursday, the direction is clear. Friday, the direction is clear for that particular week. Because since we are intraday traders, we are trading within a week, we are trading within days, we don't really, our attention is not the overall direction most times. It's your ability to trade within 2-3 days, knowing what the market is going to do in 24 hours. That's what an intraday trader is all about. Your ability to analyze and predict the market within the 24 hours. Unless you are in the business of holding for a long time, and you already have made up your mind to hold for a long time. So for example, someone that is in the business of holding for a long time will just easily wait for this market to dump to this region, and he will put maybe around here, he'll put a buy, and he's going to be ready to say, you know what, I'm selling, I'm giving a stop loss above this structure, which is, he can do 700 pips for 1,400 pips, which is actually 1:2, 1,100 pips, because definitely by the time it comes back to this place, it's coming back to this place, it's going to shatter these levels because it's 3 touches of it. It's coming back to the same level, this first, second, and third. So it's going to definitely shatter it and go up. And of course, it will come and test this psychological level of 0.800. To come and test the psychological level of 0.800 around here. So you can put it around here. So this is what a long-term trader should be thinking about. But who has this time to do 700 pips stop loss for 1,400. So that's the challenge. But which is actually, this way I just showed you is actually the way the banks trade. This is where the banks trade. You can see their orders are here. All these places, their orders. All these places are their orders. If you come to the daily time frame, you will see it clearly that there is a serious, you can see it here. Look at accumulations. This is what we call price accumulation. This is why you're seeing all these stop horns. This market is on a buy stretch. You can see all these stop horns. They wanted to, what happened was that they wanted to move it from here. They wanted to move it from here. They said, no, it's not good enough. Let's dump them again. They now dumped them. Did another accumulation. Say, you know what, it's still not enough. It's possible that they still want to come and dump us again to even form an M pattern, a W pattern, because this will be a full W pattern now before it shoots up. You understand? Knowing that intraday guys, you guys will still be in and out, they'll be dumping you guys, but there's too much accumulation around this region for the markets not to buy. You can even see the accumulations, other blocks. They're too much, too much. See, too much for it not to buy. There's a lot of buy strengths, except maybe a major news comes that is able to break all this place. Except so, because that's the only way I see sales. But for now, I'm favoring the upside. Because if you look at this is liquidity. This was liquidity. Liquidity formed here, came retest, came, shut up. And the same thing that happened here is almost the same thing that is happening here. And this is point A, this is point B. This is lower and this is higher. So there is so many factors to look at the bullish sentiment of this market. But on a short term, we are selling. But remember what I said, from 0.700 to 0.63. Now, there's something I noticed that happens to me, right? I start the week. Usually, my analysis on Sundays are usually so accurate. But when I now start the week on Monday, by Tuesday and Wednesday, I have forgotten the analysis I did on Sunday. And I'm thinking, my bias on Sunday, was it correct or was it not correct? Because between Monday, Tuesday, and Wednesday, Monday market is usually clear because it's retesting to move. Tuesday and Wednesday, the market can be like, is it selling? Is it buying? Is it selling? By Thursday, you will now realize that what we said on Sunday was correct. It's usually by Thursday, you'll be like, I should have just stuck with my bias from Sunday. And my bias for this Sunday is buy. It's just like my bias for last Sunday was sell. You know, and what did the overall week do? It sold because it came, went back, did double top and sold. So this was the first sell, this was the second sell. So all these places, if you see the fifth, check fifth and sixth, it was Tuesday and Wednesday. I hit two SLs last week. And I had two TPs last week. Tuesday was sixth. Okay, Monday was fifth. Tuesday was sixth. Seventh. If you now see, it was now eighth that the market started showing the clear direction that it will go up first. And then Friday, it was now clear that it will sell. So there's always it's something I went over the weekend and I looked at. Are we there?
Yes, sir.
I know a lot of people are lost.
Okay, with you, sir.
Okay, so this is why you need to buy our courses so that when you come for a free class, because I won't be taking. I'm assuming that you're already a CGI student. You know, you're a CGI student, university student that already knows these basics. All right, so that's what I'm looking at for Euro USD. And another reason I am still bearish on the dollar I'm
Do you
bullish
have
on
a
other
question?
pairs.
Do you have a question?
Yeah, I wanted
Hold
to.
on. Let me finish first. I will answer questions. Another reason I'm bullish on dollar or bearish on dollar, I'm bullish on other pairs is I looked at gold, I looked at BTC, I looked at pound USD, and all of them are giving me almost the same vibes. They're giving me the same vibes. That's long term. There is, yes, it may be selling now, but long term there is bullish pressure. There's bullish pressure. So look at BTC, for example. BTC, I actually predicted this move to 30,000. I predicted this move to 30,000. Let me show you guys that I did. If you go on my YouTube channel, let me show you. I predicted this move. I hope you have followed us on YouTube. Let me show you. I predicted this move 3 months ago. Look at this. This is live trading analysis with the gang, right? Link mark. Where's the? Let me see where I did it. Yeah. First of all, but I will. This is AUD US. I'm looking for. Yeah. All right. I'm sure I did. I'm sure. Was it not in this video? Anyway, just look at my. I did a video, live analysis 3 months ago. Trade review. Okay, my BTC analysis. Look at it. Look at it. Yes, my BTC analysis for 2 weeks. Yeah, I did. I'm sure I did. Trade review. This was 4 months ago. I'm sure I did. So yeah, I'm pretty sure I did. So you can check it out yourself. You can check it out yourself. Where I said, I talked about BTC moving to 30,000, but then BTC was maybe it was like at 18,000. I said it would get close to 30,000. Look at it now. You can see it in the video. Can you see it, guys?
Yes, sir.
I predicted that move, you know. And in my mind, I was saying that when it gets around it, which it did not get to, it didn't actually get, it got to this line. It got to around what? 30,016. So it hasn't actually gotten to the real point that I was expecting it. Okay, it grazed it though. It grazed it a bit. And then, so for my new analysis now is that BTC is going up. That's my new analysis for BTC. It's going up. It's going up. There's too much sentiment to the upside. Even if it doesn't go up, but if we go back, it's right now at 26,000. It will go back at least to 30,000. So probably around that 30,000, maybe there will be a reaction. But from what I know about trading, this is the first touch. This is the first time it's coming here. This is the second time it's coming here. So if it gets back to 30,000, it's shooting back up to at least 34 to 37,000. And I'm not seeing a lot of strength here to hold it. So my bias is 48. Is the next key level, which is 48,000. So if that happens, I'll be glad because I have some crypto holdings. So 48,000, you know, so that would bring a lot of bullish sentiment towards. And if crypto BTC is pushing up, dollar is coming down. Do we understand? So these are the reasons I am favoring. I'm favoring. And if you look at XAU, which is dollar. Mr. Dave, are you there? Mr. Dave. Okay, I don't think he's there. So this is the reasons I'm favoring the dollar to the downside. And same thing here, there's accumulation here, lots of accumulation here for lots of accumulation here for gold. There's a lot of accumulation here for gold. So it's the same idea that I have, the same bias I have for gold. It's the same thing I have. There's a whole lot of accumulation, and look at several touches of the trend. So gold is going up. It's going up at least back to 2007-5 or maybe 2000. Okay, so please do well to follow support the ministry. We are 204 subscribers. So they are very good videos that can really help you. Go through all the videos. They can really give you an understanding of some of the things that we're about and how you can grow. Of course, I post my lifestyle, my house, my cars, and all that. All right, so I think that's it for today. I'll just answer your questions and then call it a night. So I'm hungry, guys.
Okay, thank you, sir, and I really appreciate. My question, based on the class, we can still pay instrumentally if we want to go to the class, right?
Yes, which of the courses do you want to go through?
Because like is it not the
there
expert
are three
class?
courses. There are three courses. So there are three courses.
I didn't know about it.
There are three courses. So let me show you. So you just go to our website. This is our website. Okay. A lot of people are taking advantages of these courses from different parts of the world. So you go on the website. Right. My network is dragging. So questionglobal.com. Questionglobal.com. Remember what I said. If you think trading is about buy and sell, and you're not ready to get mentorship, I advise you go and do another business. Go and do another business. That's my biggest advice for you, because you will not succeed. And I'm not wishing you bad. It's something I know. I spent 4 years doing the same thing. .com. Yes, Pressure Global. Okay. So you just click on the. I'm wondering what's going on. Why is the site not? It's lagging. Or is it my internet?
It seems like it's your network.
I think it's my network.
PressureGlobal.com.
I think my network is fluctuating. So you go to questionglobal.com, you register for the class. So there is the class of 57,000, which is an online course. All right. There is a class of 114,000. Oh, the thing I even wanted to teach you guys today, I've not taught you people how to pass a prop firm. Who knows what a prop firm is? Who is currently on a prop firm challenge right now?
I mean, my understanding about prop firm accounts, like having trying to make findings on my own. A prop firm account is a company account, like being funded, like when you fund, like maybe let me say $1,000 account, they can give you up to $10,000 accounts to trade, and
you understand what we're talking about. So prop firms are basically liquidity providers. Okay, they are becoming very popular in the industry right now, and I feel like prop firms are they're actually prop firms are personally they are one of the best things that happened to the industry. For me, it was one of the best things that happened to me. So I wanted to teach you guys how to pass a prop firm, to pass prop firms, and the prop firms you guys should be looking out for. There are two that I work with, three actually I work with right now. The Funded Trader, my Forex fund, and Consummate Traders. Consummate Traders is a prop firm owned by some Nigerian brokers, by Nigerian traders. So there's my Forex fund, and then there's the Funded Trader. I was featured in the Funded Trader last year as their best trader, one of the best traders, one of their top traders. So that's something. So so those are the three that I'll post their links on the group so you can register and buy $10,000, $20,000, $100,000 accounts. But before you buy those accounts, when you buy those accounts, what they will now require you to do what is called a two-phase evaluation. Phase one is that you will be required to pass 8%. Now, this is why you need to buy our course. If you buy our highest course at CGI Trading University, we will help you get funded. So we will help you get either $10,000 account or $5,000 account. We'll help you pass it. All right, we'll pay for that course for you and help you pass it. So there are so many advantages of paying for the courses and all that. So
Okay.
8%, you have to make 8%. Phase two is 5%. So they will now give you that money. Not like they'll give you cash, they'll give you the account. So when you trade and make profit on that account, 75%. So just imagine if you're making $750, right? From $10,000 every week. 75% of that money belongs to you. 25% belongs to the prop firm. Do you understand? And they pay you, they pay monthly and bi-weekly. They pay monthly and bi-weekly. For those who know me will hear when I'm saying I'm waiting for a payout. I'm waiting for a payout. So that's how it works. So you can now scale up to even 100,000. The highest account with most prop firms is $400,000. So imagine you doing 10% of $400,000 every month. That's 40K. I'm sure $40,000. A lot of people don't make $40,000 in different parts of the world. So that's basically it. So with $40,000, that's a ridiculous sum of money.
Okay, I want to ask again.
You're the only one asking questions. Other people not asking questions.
Because I want to know. That's what I'm asking.
Because you want to.
Maybe.
Okay, so yeah. I think that's it for today. Since other people are not participating. So
How about me?
I hope you were able to get one or two information.
Yes, I did.
Any other further information, we'll post it on our WhatsApp group, and then we can move from there. All right, guys.
Okay,
Thank you so much. Have a wonderful night.
All right, sir. Thank you very much, sir.
Thank
All right.
you.
Good night.
Yes, sir.